the Bank of Thailand has instructed commercial banks to extend until the end of the year the debt repayment periods for small and medium-sized enterprises to help them cope with the impact of the third wave of the COVID-19 pandemic. The central bank has allowed banks to pay interim dividends to their shareholders not exceeding 50% of their net profits for the first half of this year, but barred them from buying back their shares or capital instruments before their maturity dates unless there are plans to replace them. The Bank of Thailand governor Sethaput Suthiwa Nuraput said in a statement that the first wave of the COVID-19 pandemic early last year through to the third wave in April this year has had widespread impacts on businesses as well as on people in general, prompting the central bank to roll out several financial measures to help them and to introduce mechanisms for financial institutions to assist their debtors under the current difficult and uncertain situation. Sethaput said that the extension of debt repayment periods for SMEs is not a general debt repayment extension, but intended for SMEs which are unable to resume normal business, making it difficult for banks to assess their cash flow for debt restructuring. This measure will cover SMEs which have debt of no more than 100 million bahts, and banks have been told to expedite debt restructuring with these debtors. In the statement, Governor Sethaput said the central bank has been flexible in the enforcement of regulations to encourage banks and other financial institutions to arrange debt restructuring with their debtors or to reduce the interest rates charged. He also said that the central bank is considering whether to retain the 0.23% rate that financial institutions are required to send to the Financial Institutions Development Fund, or the FIDF, which is due to expire at the end of this year.